How to profit if Tether fails. A new paper came out today, Understanding Tether's Peg in Reserves. So we won't go over the whole paper, but one key talking point that we want to go over. In Tether's latest assurance opinion, Tether announced that over 55% of total USDT reserves are now backed by US Treasuries, and that commercial paper now makes up less than 29% of USDT's backings. Before we go into their actual balance sheet, what they did put right here, that we'll click on that link in just a second. First off, Tether's a stable coin where they're supposed to be back one-to-one to dollar assets. Commercial paper fluctuates in value very, very often on the days. Tether also was very arrogant and cocky in this, saying that there was $10 billion of real-time liquidations, and it showed the strength. Okay, well, they do own a lot of cash and a lot of short-term T-bills, but they have a lot of corporate garbage and other government bonds as well, which do fluctuate in value. And as the dollar rises, those things are going to get crushed. So the last sentence before we go into the article, before we go into their balance sheets, while markets may continue to be volatile, USDT will not be. The shilling yet disturbingly arrogant statement from Tether. If there was a way, and we will go over that in just a moment, to go short an artificial tether, I would put a massive amount of money in doing so.
The reason someone would go into a stable coin is to get out and to remove risk. As Tether accurately noted, it is stable, or at least that is the service they try to offer. And to give credit where credit's due, Tether so far, to the best of my knowledge, has been able to meet redemptions. And again, to be fair to Tether, as long as they can continue to meet redemptions, there's not going to be an issue. But Josh, as you just said, the question becomes the collateral that they have. Because if they run short on collateral, or the collateral they hold is no longer redeemable at a 1-to-1 ratio, it means Tether itself isn't necessarily worth a 1-to-1 ratio. Now, whether or not that will affect the confidence of Tether, because that's what Tether's really banking on and really crypto is really resting on, that's another question.
Now let's go into their balance sheet. You can see here that the vast majority of what they're holding in this big green line is cash and cash equivalents. Well, what does that account for? We go down and see the cash and cash equivalents right here. Okay, well, 55%, as they were saying, is US Treasuries. That's a good amount. That is 1-to-1 back to the dollar. But what about the rest of this? Money market funds, 10%, though they have 6% cash, which is what they were probably paying out when people were actually liquidating. So I would not be surprised if that's starting to dry up. And then the big one right here, we have 28% in corporate paper and certified and certifications of deposit. That can be anything. They could have complete garbage of literally any kind on their balance sheet. They could be holding Evergrande bonds for all we know. Absolutely anything. They say it's AAA, but everything's AAA rated. It does not take a scientist to AAA rate a extremely risky bond. So if those start to go down in value, which they probably are already starting to, and I do suspect that the debt market is really going to start to implode, especially with corporate debt, and that would hurt Tether the most.
Let's just assume that Tether is holding commercial paper of, let's say, like a Japanese company. I'll pick on the Japanese, strong, powerful Japanese companies that aren't going anywhere. They actually turn a profit. But the problem is that if this commercial paper is denominated in yen, okay, and if even still paying out in yen, and the companies that issue the commercial paper, they're completely creditworthy, no worries about the company. There is a risk vector that comes in because of the price of yen depreciates against the price of the dollar. The company, the Japanese company who wrote the paper, could be doing fine, could be making payments, but the payments would be less than that 1-to-1 ratio of the dollar coming in. This is just an example of how you have something where you could theoretically even have completely on the level good upfront commercial paper, but there still be a risk from a factor that enters in beyond just the realm of the relationship of the counterparty.
Yeah, and then one last thing to note is 6% in this black line right here is just digital tokens. They could literally be holding Luna for all we know. That is just absolutely just garbage. Okay, so I'm sure a lot of you guys have already been very bearish on Tether, but how do you actually go short this kind of mechanism? Justin, let's go into Microstrategy's balance sheet and why that could be the perfect proxy for going short Tether.
So right here, but see, the thing is like going short let me think about that for 1 second.
Like the reason would be because if Tether goes bust, they have a leverage long position on Bitcoin. Therefore, they could go bust if Tether goes bust. So right before we get into how to actually go short an artificial Tether, let's go into the market cap, Justin.
Tether's market cap over the past week or so. And what you want to note right here is you have these redemptions, these step down redemptions of about $1 billion, give or take, every 2 to 3 days. My guess is what's going on in all of this is that there is some version of an authorized participant in Tether who's actually saying, okay, listen, I want to cash in my Tethers for actual dollars. Now, not just to be clear, not everyone can do this. In fact, most people can't do this. And there's minimum redemptions. I think it's 100,000 is what comes to mind. And these are, by the way, again, billion-dollar redemptions. But what's interesting in all of this is that if you look over the market cap over time, going back the past year, you see someone for some reason is actually redeeming the tethers for the underlying collateral. Now, again, to be completely fair to Tether, as long as Tether actually has enough collateral, like everything's going to be fine. So on that front, it's okay. And again, truth be told for Tether, not everyone's going to redeem all their Tethers for $. So Tether, if they wanted to roll the dice, they could probably have a little bit of commercial paper. Again, they can probably get back.
Absolutely, but
a little
28% corporate paper and then 6% backed by digital tokens. I mean, that's nearly 34% of your balance sheet. That's backed by absolute just garbage. Because if the Fed continues to raise rates, that corporate debt's going to be going up, down in value. And there's a high degree of probability that those digital tokens are going to be going down in value. Let's just say there's a situation where right now 10 billion Tether got liquidated, $10 billion worth of Tether got liquidated.
And Tether was able to meet the redemptions. And they were able to meet the redemptions. So credit.
Yeah, fair point to them. But what happens if we get to a situation where instead of it's 10 billion, if it's 30, 40, 50 billion, then we're going to see a situation where they've sold all their treasuries, they've sold all their dollars. Well, now they're looking at their corporate debt. Then what happens? Then there's definitely going to be a situation where they're selling that corporate debt, driving it down in value and having this cascading effect, most likely also going to have a downward price on Bitcoin until they go bust.
Josh, right now Tether's market cap is about 72 billion. And if Tether goes to zero, it's not that, suddenly 72 billion just vanishes out of the crypto land. Rather, it's the velocity. You've got to look at how many times is Tether turned over. If you trade in cryptos, think about how many pairs you have of USDT on both centralized exchanges and decentralized exchanges. But rather, what you probably see happen is that if the confidence, and this is the key thing, right? It's confidence. It always comes back down to confidence. And if confidence is broken in Tether, whether it's something that's real or something that's imagined, it doesn't matter. It just matters that confidence, or there's enough confidence is lost in the market where you trigger this cascade event. So what you would actually probably see happen is people would be selling off their Tether to buy whatever else they could buy. So the obvious one I would go to, I don't hold any Tether, but the obvious one I would jump to is USDC. But you would also probably see people fleeing back into Bitcoin, fleeing back into, Ether or whatever, right? The big names on that front. If Tether were to start to slide, you would actually probably start to see the price of the core assets, so think like Bitcoin and ETH or whatever, right, appreciate in terms of Tether, but at the same time depreciate in terms of, let's say, like USDC or even like USD, whatever path you wanted to take to get there. I would keep a very close eye for that, because that suggests to me that enough people are saying, listen, I don't want to hold Tethers anymore. I want to hold a real asset, or I want to hold an alternative asset besides Tether, and I'm willing to pay more Tethers to get that asset.
And then the reason why this would be bearish on the price of Bitcoin is because nearly over 50% of all transactions are done through Tether. So
as a pair, yeah.
So the liquidity of buying crypto would drop dramatically. I mean, astronomically. Yeah. Let's say there was a situation where you just had 50% less liquidity in the stock market. All the big guys would stop playing and people would just sell and hold cash and wait for something to happen. The loss of confidence would be cratered, and you need these institutional buyers to really continue to drive up the price. Well, yes, I think it would be fine long term, but short term, it would absolutely crater the price of Bitcoin. I mean, we could see prices down into the low single digits if something were to happen. And because of that, if Tether were to go bust, the perfect proxy to go short could actually be going short Microstrategy, who is leveraged long Bitcoin.
So there's a few assumptions you've got to make in this, to connect the dots here. If you assume that if a loss of confidence of Tether would translate to a drop, albeit temporary, in the price of Bitcoin, and if you also assume that a drop in the price of Bitcoin would also reflect upon the publicly traded price of MicroStrategy, then the way you could play it is, okay, well, listen, we can go short on MSTR. And you might say, well, Justin, you can just go short on Binance, leverage yourself up to the tits or whatever. And like, okay, well, yes, you could. But just as from me speaking from my own risk preference, for me, if I'm going to go short or long in crypto, I would much rather do that outside of the crypto space. I'm not trying to say like Binance has scam.
The reason why I would is because of option and defined leverage. If there was a way where you could strictly go short Bitcoin via long puts, I would be all for it. The thing is, you can't do that currently. Yeah. And because of that, you need to find a proxy. And I think the best proxy is finding a product who's actually leveraged long Bitcoin, and their margin call will start around 21,000. That does not mean it's a complete margin call. call, but it's more of a margin event where they have to post more collateral. They
Exactly.
we'll go over their fundamentals in a second as to why they're not the greatest company either. So it's just they've already dropped significantly, but they're still trading well above fair market value. I mean, they're only trading at these levels because of the Bitcoin that they own. But if that Bitcoin really depreciates in value, there could be significant downside to the stock. And
Yeah.
if you are like us and have that view that Tether will go bust, and let's say the next year, then this could be the perfect proxy to actually go short. So Justin, let's go into their fundamentals.
Yeah. So right here, this is basically their. So and again, to be fair to MicroStrategy or whatever, right? Look, so this is for the past quarter or whatever, right? They're bringing in, call it, let's say, 34, like the mid 30s, call it, say, 35 million per quarter of what they're bringing in, assuming the quarters are relatively smoothed out or whatever. So okay, they are generating some cash, but the big picture here is that when you think about MicroStrategy and you think about the price that Bitcoin has on the price of the ticker symbol of MSTR, then you can say, okay, well, listen, if you've got these two hops, if Tether going down will decrease Bitcoin and Bitcoin going down will decrease MSTR, you can use the option chain, the relatively liquid chain on MSTR to position yourself whichever way you see it going. Or likewise, if you think Bitcoin's going to go back up or whatever, right? Well, bam, you can buy calls or whatever. But the key thing is that on this front, you're able to use something that's a bit more traditional to capture the directional movement of what's going to happen, or well, you're able to use something a bit more traditional to go after what you think will happen in the non-traditional space of crypto. So that's kind of why I like it.
Yeah, right now MicroStrategy's market cap is around 2.3 billion. Yes, they're making about $120 billion a year, so they're still trading at an extraordinarily high PE. I don't know where that is, in the 30s, 40s, and so that's right there. That's a decently short company. Right now, their stock is trading at about $200. If the price of Bitcoin falls in half and they are not really making any more money, we could absolutely see another 50% drop in the stock price. And what would that do to the options, especially if the volatility of the move was increasing at such a rate because of it as an event, because they're getting margin called, and because Tether's starting to go bust? People start to lose faith in Bitcoin. They start to lose faith in MicroStrategy. They could not only go down below 100, but they could get into the low, I don't know, like $80-$70 a share. That's going to have extreme upside on your puts. I mean, I think you could potentially be looking at a 5-10 bagger if the rate of change in the move is as drastic as I think it would be. Because if Tether does go bust, I don't think it would be like a slow Bitcoin going from 30,000 down to like 25, then to 10,000 in like a year. I think that would happen in like a span of a few weeks. At that would increase the price of the option so drastically and decrease the price of MicroStrategy, as that would be a margin event for them. People would also be losing faith in them. So I think that would be a perfect opportunity to really profit from them.
Yeah. The second thing on that too is that, in addition, you've seen the markets, equity markets have or at least as late, have a strong correlation with the price of Bitcoin. And so if Bitcoin starts going down and the markets start going down too, this is just an additional headwind that's going to keep pulling things down. So again, depending upon how one, views the market, and especially, where we're at in the market right now, it might make sense, to say, okay, well, listen, do we want to have a little bit of protection to the downside, or even do we want to have a bit of speculation to the downside? But again, the key thing on this is there's two assumptions you've always got to keep in the back of the mind. If something happens to break the confidence of Tether,
or I'd say three assumptions. Will something actually happen to Tether?
Will something actually happen to Tether? And if something actually does happen to Tether, will that be enough to affect the confidence in Tether? And if the confidence in Tether is affected, will that also then rebound to affect the confidence? Will that trigger sell pressure on BTC? And if BTC goes down, will that then in turn trigger, a bearish price action on MSTR? And if you think that all those two things will end up, well, there you go. One other thing too, the reason I would not necessarily, me speaking myself, I wouldn't necessarily use like Binance or a crypto product to do a leverage trade. It's not that I don't trust Binance or anything like that. It's just that you want about traditional finance, but at least there's regulations in that point versus the more wild west of the crypto space. And I'm not saying, Binance will give you like a scam work or anything like that, but I much rather like the idea of having the counterparty, especially if we're going to get into volatile times, be the OCC, which is ultimately what's going on when you're buying or selling a put, then let's say Binance. Again, not trying to throw Binance under the bus here, but I'm just simply saying from counterparty risk, I would feel a bit more comfortable for myself. Again, other people, if they have their higher risk tolerance, there's also a completely separate answer for that. And that's just, shorting BTC directly. So yeah.
What are your thoughts on the future of Tether? Do you think it will go bust? And if so, what will happen to the price of Bitcoin? Thank you, and we'll see you in the next one.